Hello, traders. There's obviously a lot going on in markets at the moment this week, with price action signals not really good for more than a day or even two at best. But there are some very nice charts worth keeping an eye on as the week progresses. So today I'll be covering crude, gold, dollar yen, dollar CAD, euro, and then some thoughts on the pound sterling. Let's dive in. Starting with crude. If you've seen my previous videos, you will have noticed that I like to trade longs off these levels in crude. But there is some conflicting narratives for crude, in my opinion. First, the OPEC narrative talking about increasing production output, leaving global oil markets oversupplied, which I sort of don't get, as a lot of these oil-producing nations somewhat base their budgets on a certain price level or range, and the so-called fiscal break-even price of oil. And from what I recall from various sources in the past, the break-even price is generally ranging from around $60 to $80 a barrel. So I don't quite understand why they would want to put downside pressure on oil while there are oversupply concerns. Anyway, that's well beyond my knowledge and expertise on the matter, but I think that's worth mentioning that the narrative has shifted towards higher production output, and that's amid an oversupply outlook, and therefore a negative price risk. Technically, however, I do still like oil at these levels, which is tested below this key pivot area around 63.64, as outlined in my previous videos, and more recently, it's put in a double bottom off the 61.50 area. So long as price is inching back into this range, I feel that it is still constructive for more upside into the high 60s. And we're also seeing some fresh upside risks to price as well, on top of the narrative mentioned earlier. Israel, in their latest attacks in Qatar, essentially signals that they don't want peace and still full on with its mission to eliminate Hamas. And Russian drones, whether intentionally or not, has veered into Polish and NATO airspace. Oil has got a bit of a lift on that news, and it certainly does appear that geopolitical tensions are on the rise again. For gold, we've been looking at intraday short opportunities in our trading room, but given the latest news flow, the bias is still firmly on the upside, despite some price action signals forming, with yesterday's reversal candle rejecting the move above 36.50 and to close at 36.26. And of course, gold being quite overbought on this run-up, with price stretching almost 3 standard deviations from the 20-day moving average, which tells you how statistically rare these deviations are. And if we look back, we can see that these spikes do not last long at all. For now, however, this 36.41 to 36.46 shaded area has been a very important pivot in recent sessions. We were bearish below 36.41, but now we're bullish from these levels given the news flow for some scalps to the upside. So overall, we do see gold continuing its upside for the near term, and beyond that will depend on how the inflation data comes in this week, but we do have a tactical mean reversion trade to 3600 in mind, and possibly 3500 and even 400 depending on how events evolve. For FX, two trades I personally like at the moment, dollar yen and dollar CAD for both longs. Dollar yen has flushed this base around this 146.60 to 80 area, which also coincides with some fibs around 1.4670 and 80. And we printed a very strong bullish reversal candle where the position of the wick and close is in a very good place. So a good quality signal, but again, with so much going on, it's difficult to take these signals into something lasting more than a day. Also, the wick was formed on some volatility from BOJ headlines, and at the end of the day, BOJ-related moves have almost always been a fade, and it's mostly about US rates driving this pair. On that note, the market was pricing in almost 34 basis points of cuts after the August NFP, so going almost 50-50 odds of a 50 basis point cut, and has since been paring back slightly to now 30 basis points. I think the risk is still towards that being pared back towards 25 basis points, which should keep dollar yen supported. I also want to look at the 10-year yield chart, which is back to this reasonably strong trend line projected from these lows. And for all the pessimism surrounding the US labor market, I think the US economy has a strong ability to surprise on the upside, and this 10-year yield to recover its recent ranges in July. For instance, the Atlanta Fed GDP nowcast is forecasting 3% Q3 real GDP growth. Forward earnings expectations have been continuing to rise, and the NFIB survey yesterday showed that businesses have been increasing capex, expecting higher sales, becoming less pessimistic on employment hiring, which are all the types of behaviors you'd expect when businesses anticipate growth. Looking at dollar CAD, if there are any clear relative value themes in FX right now, I think dollar CAD is the one to look at. US economy, in my opinion, is doing quite fine, and the Canadian economy is not. Thus, we see good potential for a policy and growth divergence trade in dollar CAD that could take the pair back and above the 1.4 handle. Technically, it's been attempting to put in a right shoulder in the 1.38s, but the longer-term chart does show a fairly strong base with a recovery above this well-observed trend line. Looking a little closer, we had a strong CAD sell-off on their big negative payrolls number, which probably should be taken with a pinch of salt, as it looked like it was giving back some summer job gains, with most of the job losses being part-time and self-employed workers. But netting those losses off with gains made during the summer, the trend is still negative and weaker. And GDP growth has been benign and even turning negative. So there are some signs that the economy is heading towards a recession. EURUSD, we're on watch for a false break on this one, with a Marubozu candle after rejecting the 1.1780 area yesterday, which makes for a very powerful price action signal, right? If you think of these as a 2-day candle, it would look something like this, with roughly the same open and close and a very long wick. A good follow-up candle today with a close below the trend line would offer a fairly strong turn signal. Outside the chart, I think there's a lot of positivity in the price. The euro, for instance, carries a very positive risk premium, outperforming rate differentials, and yet Germany and France, the two biggest powerhouses of the EU economy, are still looking quite weak fundamentally, and that's despite plans to increase defense and green energy spending, and so on. But again, still a lot of event risk to navigate this week, which reduces the reliability of even very strong price action signals like these. But for now, the technical picture is looking very shaky on this latest push to the upside, and we'll be looking to see how the price action evolves for the rest of the week. Similarly, cable, a beautiful rejection bar off the 1.36 handle, which has capped multiple rallies over the last few months. For all the pessimism around the UK budget and fiscal austerity, I think the UK could surprise with some resilience. For instance, the final composite PMI was revised higher from the initial flash release, driven by a very strong services report that saw growth accelerate, new orders rebound, and higher business optimism. And lastly, to take into account my comments on Germany and France, for instance, I think Euro-Pound could be the trade to look at for GBP. It's rejected the 0.87 handle convincingly, and has also done so in recent months. There's also some nice symmetry to the broader structure, and I'm thinking that if we do get a pop on the ECB event tomorrow, I'm thinking that might be a good time to take a position and see how events evolve. Either way, I continue to like Euro-Pound lower and will be looking to initiate a short position. That's all for now. If you found this insightful and interested in seeing more content from us, please give this a like and subscribe to the channel. And if you're a serious trader that's interested in joining our private group of experienced traders, check out the link in the video description. Thanks for watching and good luck trading.